Oliver, it's Friday afternoon, and the FTSE is approaching its all-time high. We're feeling good. Does this milestone have any real significance?
Well, if it hits its all-time high, which was 6,950, that was reached in December 1999. If it gets there, there'll be a fair bit of hoo-ha and lots of people pontificating about what this means. For me, it doesn't really mean very much at all. The FTSE has got close to that all-time high several times in the past kind of year or two and hasn't quite made it.
Right.
Even if it does, though, it's a very historical, backward-looking thing, whether it's close to its high or not. I'm sure chartists and technical analysis analysts would love this kind of thing. For me, though, it's more about valuation and looking forwards. And one thing we do know about the FTSE is that it's looking expensive at the moment. FTSE 100 is trading about 15 times forward earnings. Its average over the past 10 years is 12 times. Now, that may be affected by the financial crisis and what happened in 2008, but nevertheless, it is looking fairly expensive.
But maybe it looks cheap next to bonds, though, with yields of major European sovereign bonds and U.S. treasuries hovering around somewhere between not very much and nothing at all. A 15 PE on an index equates to an earnings yield of 7%.
But these are equities, not bonds, and what happens to one doesn't always signify what's going to happen to the other.
The FTSE, despite approaching its all-time high, has actually underperformed some of the other major indexes over the last couple of years. We've seen Japanese stocks do extraordinarily well. We've seen U.S. stocks continue to march forward. Several European indexes have outperformed the FTSE as well. Why isn't the FTSE on the leaderboard?
It's largely because of the makeup. The UK has traditionally been quite strong in natural resources, and that's become even more so in the past sort of 10 or 15 years as the stock exchange has made effort to attract a lot more oil and gas and mining and commodities companies. So that's really where London has specialised, and that's not been a great place to be in the sort of post-2012 rally. Oil and gas, other kinds of natural resources have underperformed, and that's a big part of the FTSE 100. On the other hand, the areas that have done well, the sectors that have done well during the rally, particularly technology, which is where the US index is very big, sorry. That's done really well, but the FTSE 100 has very little in technology, only 1%. So you've got this kind of double effect. London is big in the areas that have done badly and small in the areas that have done well, which is why other indices have outperformed.
Well, you mentioned the UK index being strong in mining, but as far as I know, the tin mines of Cornwall were closed some time ago. As we look at the FTSE now, does it really have any connection to the British economy at all? Is this properly a British index?
Almost no connection at all. You look at the top companies, the biggest companies in the FTSE 100, and you say names like HSBC, BP, Shell, GlaxoSmithKline. These are all big multinationals that just happen to be based in the UK. Okay, HSBC has a fairly big business here. Shell has some petrol stations here, really. But these are multinationals and revenues from all over the world. If you want a sort of barometer of the UK economy and something which does most of its business here, you have to look outside the top 10 to Lloyds Bank, which is the biggest of the FTSE companies that has a lot of exposure to the UK economy. But as an index, I don't think the FTSE really reflects the UK economy at all.
Well, we will sit back and wait for Lloyds to hit its all-time high, and when it does, we'll have a video about that. Thanks, Oliver.